Alright folks, so a little treat for y'all to see the charts today. We'll be using the Wyckoff tape reading chart, and I'll show what that is and how it's used and all that. Alright, but before I do that, I'll just talk about setups. Everyone knows jump over the creek and test, which is nothing more than break and test, right? And sometimes it goes a little bit lower into your demand and supply zones and whatever, but this is your break and test. And these are this is the continuation. Continuation is your break and test setup. Okay? This is your break and test. And then you have your reversal setup. There's only two types. There's continuation and there's reversal. There's really not much else. So you're either continuing with the trend or you're reversing the trend, where you have climaxes and change of behavior. Climaxes and change of behavior, right? So what we want to really focus on are the setups to make this very practical, and not all that other analysis, because you get lost in analysis. But before I go there, everyone knows the breakout and test. But very important that they understand what the climax is. Climaxes is ending action. Okay? That you gotta understand, ending action is very important, because one of the things that Wyckoff really focused on was climaxes. All throughout his course, he even started his course when he explained the first behavior was the climax. So the idea of climaxes is important because you want to get in a trade, right? You want to get in a trade. You have to let the move end so a new move begins that you can trade. So you need the current move to end so you get in for the next move. So for example, if you have a rally and you have a pullback, you want the pullback to end so you can get in on the reversal and ride it to the higher highs. How do you know the pullback has ended? How do you know whether a move has ended, whether it's a pullback or a rally? The answer is ending action. And ending action is very important because it is part of it's the left-hand side and part of, I think it's the part of what Wyckoff used to get in. Meaning he didn't really. Sometimes he would get said that get in on the climaxes, but at least he would wait for the climax to occur before taking the position. So anyway, so these are the two setups: continuation and reversals. Okay, so that's the setups. Now, what else do you need? You need location. You need trade location. So, or points of interest, or whatever you want to call it, right? Where to find trades. So this is also the same. It's the test of breakouts, right? That's the location. And the other is demand zones and supply zones. Okay? So where do you find trades? Where to find trades? Location. Where to find trades? Trade location. Where to find trade? Okay, where to find trades? All right, so tests of breakouts and supply and demand zones. There are others as well, but these are the two big ones. You don't really need anything more than this, because basically the market is either trending, where you get in on a continuation move for the next rally up, or it's turning. That's when you get in on that type of turn. So where to find trades? 1, 2, setups 1, 2, done. Okay, now, so let's examine the first one is test of the breakout. Now, what makes this tough is identifying where exactly the best location is, and you can use volume for this. Meaning when there's a breakout, you can use volume to identify where to get in on that test. All right, where to look for triggers, where to engage, where to buy, where to sell, right? That's you can use volume, and I'm going to show that now. All right, and then after that, the reversal. Now, for the reversal, we're interested in climaxes, and we're interested in change of behaviors. All right, now there is shortening of the thrust as well, but I'm staying away from that right now. I'm only focusing on making this as simple as possible. So in terms of high volume, like this is what you want to look for. Climaxes and change of behavior, all right? Again, when looking for tester breakouts, what are we looking for? We're looking for that high volume break. Okay, so we're looking for that high volume break. And when looking for, what did I do? Oh, let me take a step back. I think I one sec. Break and test, right? So that's the test of the breakout. What do you look for here? You are looking for a high volume brick or bar or whatever. So high volume bar or high volume price, high volume, whatever that high volume thing is, that high volume node, whatever. You're looking for that high volume thing. And for the reversal, you're looking for climax and change of behavior. All right, that's what I am trying to convey to you. All right, now let's actually do it. So this market, what is this? This is gold. So gold, I'll just give one immediate example. You have a high volume break down. You could call this a change of behavior, whatever you want to call it, right? Now, is it a good idea to trade up here? No. Why? Because it's not. If it's testing a breakout, yes. If it's at a supply and demand zone, yes. Is it at any of your point of interest or levels? Actually, technically a little bit, yeah, but no. Why? Because you want it to go down deeper and give you the opportunity. All right. So I'm just going to show, if you were to take the sell, where would you do it? Remember, you only have two setups, right? So if it breaks like this, you're looking for continuation. Where is the continuation on the high volume test? Where is the high volume test? Right there. That's the break, the 29s. Where does it go? The same level as the 29s. What happens? Makes a lower low. You see? Because that's where the CM engaged. All right, now you could say it's the 32, but the 32 didn't break anything. It's the 29 that was the break of these support lows. All right, so that's the big print. That'd be the 1, 2, 3, 4, 5, 6, 7, about 8 bars. So that's where it's going to go, and that's where you have a continuation trade opportunity on gold. It's a little shitty opportunity, but it's an opportunity nonetheless. And if you're smart, you'd say, you know what, that's great, but I want to get out because this thing had a 50 and it reversed back up. So if you were short up here, that 50 would tell you there's a problem. Side note, all right? But the point here, break and test. As a setup, there's the break, there's the test. All right. And if you're an upthrust trader, then this is the daily upthrust with the climactic move up here. And then there is your change of behavior. So that should turn the market lower. Now, this is real time. These numbers, it's a little bit off. After hours, it throws me off because I don't know which one's high or low. But just looking at this, you would say that is the high right there, that number right there. right? Because it's bigger than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 prints. So that would be the break, and the test would be against that area with a stop above here. Anyway, long story short, that's the break and test. Alright, now let's move to the next market. So this is gold, done with gold. What am I waiting for in gold? I told you all yesterday, 1960. All right, now, I'm not really sure it's going to get there because of this high volume area right here. It might just reverse. So, I don't know what to do about that. How much is the cause here? It's not that much. It's already hit. It's about 8 or 9, so yeah, I don't know. Yeah, I mean it. Yeah, I don't know. Yeah, I mean it's pretty high up. I don't want it because I think it's gonna run it and do a spring, but we'll find out. Okay, so anyway, where the next market? Hold on. All right, again, what are we looking for? Right here, we have trade location. What's the trade location? It's a breakdown on heavy volume, right? So what is it breaking? These lows back here, that's your trade location. Price goes back to it and tests right there. What are we expecting there? We're expecting a turn at the trade location area. There's a market pullback and there is a reversal. So we would see what kind of reversal there is. Well, there's the reversal. All right. Okay, but as it was going, minus. All right, here it is. All right. Anyway, so I'll just show just for the. I'm just trying to make this easy. So here you have a breakout. Here you have that big print, right? That basically initiated the breakout. Here you have the test, and you have a couple of boxes that go up. Why didn't it go through? Because here you have the selling. You have resistance. Why do you have resistance? Because that's the test of the breakdown on a higher time frame. So that's why it didn't go up. It only tested resistance from a test of the breakdown on a lower time frame. It tested the resistance area, which was caused by the heavy selling as indicated by the higher time frame chart. All right, so we have here again you have a break and you have a test and you have that lower low like I explained. No brainer, right? Where's the break here? Where's the heavy volume right there? How much is that? That's 6,800 contracts breaking these lows. 6,800 contracts. You know, after that there's 117. So they're selling until it goes to this lower low, and then we'll see what happens. Anyway, let's move on to the next market. So in this market, I'm going to show the reversal trade. All right, so where's your trade location? Trade location is in the demand zone over here, or the breakout, test of the breakout. What happens? Price goes to either in it or taps very close to it, right? What happens? Remember, in these types of trades, what are you doing? You're just looking for a turn. How does the turn happen? Climaxes and changes of behavior. Only focus on those two. You don't have to focus on everything else because those are the two main ones. All right. So what happens? You get your climax. What did I do? Right here, yeah. It was down, 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 boom, 100. That's the biggest volume in 100 bars. And look at the print. That 79 is 79,000 contracts traded. And market going sideways, which is the accumulation line right there. And then the breakout right there. When it breaks out, you can get in on the test. Again, climax, all of that, breakout, you can get in on the test. And it goes up. And now it's just doing who knows what. It didn't go any higher yet. Why? Because end of the day, these guys covered and took profits, and that's why it fell. All right. So that's what I wanted to point out. So remember, two types of trades: continuation and whatever. And you're basically trading those two areas and looking for reversals there as well as continuation trades. And that's all. So what do you learn from this? When the market is pulling back after a rally, you are looking for a reversal trade. A reversal trade will have climaxes, change of behavior, or breakouts. So you have your climaxes here and there. If you're wondering where the change of behavior is, it's visible on the other chart, which is right next door to it. There it is. And you have your cause or your accumulation line, break, change of behavior, test. Now we'll see what happens. Okay? All right, folks. That's all she wrote. Thank you and bye-bye. Oh, this, by the way, is the tape reading chart. Wyckoff for intraday trading used two types of charts. One is the wave chart. Everybody and their mother knows about it, right? It's the, you can have a wave chart, put it on a bar chart, and label it with either price, volume, or both. You could also use time. I like to use time, or price, however you want to do it. The second type of chart is what I'm showing here. This is called a tape reading chart. The tape reading chart is a wonderful chart, but it's very similar like the footprint, but it's Wyckoff. Meaning what he did was he took the point and figure, and instead of the X's and the O's, he put volume. In the X's and the O's, he had volume. All right, so this is it. All right, now I'm done.